Hey traders, Mike Sir here. Welcome back to my channel. As part of my trading tools series where I show you all the tools that I use on a daily basis to analyze the financial markets, I'm going to share with you a technical indicator that many Japanese traders say is the best trading tool that they use to analyze the Japanese markets. In fact, I spoke to a few of my Japanese friends and they all use it on a daily basis. The indicator is called Ichimoku Cloud. So in this video, I'm going to share with you the benefits of using this technical indicator and show you how to use it to help you in your trading. Now, please make sure that you stick around to the end of the video as I randomly pick one chart and analyze using the Ichimoku Cloud indicator and share with you my thoughts. Let's get started. First off, for those who are not familiar with the Ichimoku Cloud indicator, it's a technical indicator that was created by Japanese journalist Goshi Hosoda in the late 1960s. Now, the Japanese name for it is called Ichimoku Kinko Hayo, which means one glance equilibrium chart. Now, it's often referred to as the one glance cloud chart based on the unique clouds that are displayed on the chart. The Ichimoku cloud shows on a chart three key things that can help you as a trader. It tells you what the support and resistance price levels are, the price momentum, and the trend direction. Now, many experienced traders prefer this over candlestick charts as a better way to forecast future price movements, and I'll explain the reason why later. Also, one thing to note is the Ichimoku indicator includes many lines and information that can be complicated for inexperienced traders to understand. So what I'll try to do is simplify the explanation for you, and in future videos, I'll discuss more experienced strategies on how to utilize this powerful indicator. So let me explain to you the 5 components of the Ichimoku indicator, which are essentially 5 moving averages lines. And to simplify things for you, I'll use the line colors on the TradingView chart to explain each colored line separately. So the blue line is called the conversion line, which shows the 9-day moving average, and it's calculated by taking the average of the highs and the lows for the last 9 trading periods. Now, if the blue line is going up, then it means the price is trending up. If the blue line is going down, then it means the price is trending down. However, if the blue line is moving sideways or horizontally, then it means there is no price trend. Now, keep in mind that since the line is based on a 9-day moving average, the trend is very short term. Next is the red line, which is called the baseline, which shows the 26-day moving average. And it's calculated by taking the average of the highs and the lows for the last 26 trading periods. The red line acts as the price support level when the price is above the red line, or acts as the price resistance level when the price is below the red line. Now, to simplify things, you could think of the red line as an indicator of future price movements. So for example, if the price is above the red line, then you could think that the price will keep going up, or vice versa. When the price is below the red line, then you could say that the price will keep going down. In addition, since the line is based on a 26-day moving average, it shows a medium-term trend. The third line is a light green line, which is called the leading span A, and it shows the average of the highs and the lows of the red and the blue line, and then it plots that data 26 trading periods into the future. If the price is above the light green line, the line serves as a price support level, or if the price moves below the light green line, then the line becomes a price resistance level. The fourth line is the pink line, which is called the leading span B, and it's calculated by taking the average of the highs and the lows of the past 52 trading periods, and then it plots that data 26 trading periods into the future. Like the light green line, if the price is above the pink line, then it serves as the second price support level, and vice versa. If the price moves below the pink line, then the line becomes a second price resistance level. The last line is the green line, which is known as the lagging span. It's calculated by taking the current price and plotting it 26 trading periods into the past on the chart. And the trend is deemed to be upward when the green line is above the price, and downward when the green line is below the price. Now let's put all the lines together and try to interpret a price chart based on the Ichimoku cloud. Now there are many strategies associated with this indicator, but what I'm going to do is just explain a simple strategy for you to get started with. First off, let's look at the cloud right here, which is formed by the two leading span A and B lines, which is the light green line and the pink line. Now if the price is above the cloud, then the price trend is up. And if the cloud is green, then you look to buy. However, if the price is below the cloud, then the price trend is down. And if the cloud is red, then you look to sell. Lastly, if the price is in the Ichimoku cloud, then this means that there is no trend. Now that you determined the trend, you want to look for a scenario where the conversion line, which is the blue line, cross the baseline, which is the red line. Now, for those who know this type of strategy, it's basically a moving average crossover when a short-term moving average crosses a medium-term moving average. So for example, if the cloud is green, you want to see the 9-day moving average, which is the conversion line or the blue line, cross above the 26-day moving average, which is the baseline or the red line. This signals a buy entry. Now to confirm the buy signal, you need to see three things. The two lines and the price should be above the cloud, as well the lagging span, which is the green line, must be above the price. On the other hand, if the cloud is red, you want to see the blue line cross below the red line. This would signal a sell entry. As well, to confirm the sell signal, you need to see three things. The two lines and the price should be below the cloud, as well as the green line must be below the price. One important thing to note is that if the price is inside the cloud, there is no signal, irregardless of whether the cloud is green or red, because as I mentioned before, there is no price trend, so we don't trade. Before I share more about how to identify a trading opportunity using the Ichimoku signal, please take a moment to like this video. I would really appreciate your support. Alright, first of all, I want to say that it's not easy finding an opportunity based on the Ichimoku cloud signal. Now I'm scanning through lots of charts and trade signals don't often appear, but when it does, it's a pretty reliable signal. Here's a chart of the stock Meta, which was previously Facebook. So what I'm going to do here is I'm going to add the Ichimoku cloud indicator onto this chart, and then we can analyze it utilizing the indicator. So you can see right here, you can go to indicators here on TradingView and just type in Ichimoku cloud. Okay, so we added it, and you can see here a whole bunch of lines. Now to simplify it for you guys, what I'm going to do is I'm going to actually remove most of the lines and do it line by line. All right, so the blue line, as I mentioned, is the conversion line, which is the 9-day moving average line. It's supposed to be indicating the short-term trend. You can see here the price is below the blue line, indicating that the trend is down, or at least the short-term trend is down. So next we are going to add the baseline. The baseline is red line, and you can see the price is also below the red line. The red line is the 26-day moving average, and it's below it. It's a medium-term price trend, so it's also below the medium-term price trend. So the next thing I'm going to add is the leading span A and B, and plot the background, which basically is the cloud. So you can see here that the price is below the cloud, which is in red, and the red indicating that it is a downtrend. Now the other thing that we need to look for is when the blue line crosses the red line here, and you can see that it's right at the intersection just right now. So if the next day we see this cross below it, then that basically signals a sell entry. Now to also confirm this is we are also going to add the lagging span, which is kind of like a confirmation. You can see here it's the green line right here. And we want to see the green line below the red line. So it's just basically right here. So for extra confirmation, if it's below the price here, then it just gives us greater confidence that this trade will head even lower. So based on this, if I were to just look at from a technical analysis support resistance level basis, actually this is a key point right now. So you can see here, this is the major support levels. So along with the support level, along with the Ichimoku cloud, I have a feeling that based on the technicals, if the price breaks below $310, then this is a good entry to sell or short the stock. Thanks for watching. If you like this video and want to watch other videos where I show you all the tools that I use on a daily basis to analyze the financial markets, please click on the left for more videos and click on the right for the full playlist. I'll see you in the next video.